Hi everyone, welcome back to another episode of Charting Markets with Jeremy. For today, let's take a look at the Hang Seng Index. After seeing some consolidation as well as some bottoming price action over the past few weeks, I think probably we could be looking at a bottoming move real soon here. So let's just jump straight through, first looking at the longer term time frame on the weekly chart. So over here, you can see the Hang Seng Index has actually fallen into a rather sharp correction phase going all the way back since February of this year. So all in, we have actually seen this correction playing out over the past 10 months or so. And in fact, in terms of the total drawdown that we have actually seen, the Hang Seng Index has actually fallen about 24%. And only recently started to see some early indication of a bottom. Mainly how it has been actually consolidating around this support level of around 24,030 points. And that was also a key cluster of support back in October of last year, highlighted here in yellow. So you can see here over the past 3 weeks, the sell-off has actually kind of stabilized. And in fact, prices have been consolidating around those levels of 24,030 points, showing us that the market is kind of respecting the floor. And more importantly is the reversal move or recovery that we saw last week, which eventually formed this hammer reversal bar, which from a technical perspective, this is something that is optimistic for a bottoming kind of move to play out eventually. And there is also a good indication of this particular price action showing up exactly at the COVID bottom low here back in March of last year. You can see after forming this hammer reversal bar over here back in March, the Hang Seng Index just literally bottomed out and moved into a nice rally over the next 2 months or so. So probably we could be looking at a similar replay here with this hammer reversal bar that we saw last week. And if we were to see further follow-through movement to the upside, I think probably the bottom has already been established here as of last week, and the general trend will likely continue to move towards the upside moving forward. So at least that is what the longer term chart is showing. If we were to look closer on the daily time frame, if I were to zoom out, you can see the support level at 24,030 points is much obvious. Strong rebound over here highlighted in yellow back in October of last year as well as in August of last year. And right now you can see the near-term movement has been showing up pretty much consolidation around this level of 24,030 points. But the key thing that I would like to highlight over here on the daily time frame would be to kind of look at the relative strength index here at the bottom panel, where we spotted this bullish divergence pattern actually showing up. Mainly what we mean is I can see going back since July of this year, the RSI has actually fallen to this extreme oversold low of 23. And also at the same time, price for the Hang Seng Index also fell to a new low of around 24,750 points on the same day of 27 July. And as price progressed along, you can see the Hang Seng Index has continued to form 2 more lower low points over here recently in September as well as in October. However, if you were to look at the relative strength index, instead of showing us a weakness, the relative strength index has actually formed 2 higher low points over here, respectively, at 31 in September, and then more recently, new higher low point 38 in October, which all in tells us that a bullish divergence pattern is forming. And that could be an early indication that this bottom is actually forming up pretty nicely here as we move along with this bullish divergence pattern. So that's the first positive sign that we are seeing here right now for the Hang Seng Index. If we were to look from another view, you can see the Hang Seng Index has actually been consolidating within this range here for the past 3 weeks, and only recently, just this week, managed to kind of break above this 3-week range nicely just this week, which we think is yet another positive sign that it's ready to trend higher here in the near term. So this is the breakout that we are watching here. So all in, as we move along, as it continues to trade well above the 20-day moving average or above this consolidation range, I think all in, this new uptrend will likely progress along fine. And upside-wise, following this breakout move, we'll likely see the bulls likely targeting this resistance at around 26,560 points as the first target. And then after which the next resistance at around 27,500 points, possibly with a timeline of 2 to 3 months out to hit those levels. So upside-wise, we are looking at probably near-term upside of 6%. And then after which about 9 to 10% upside there, probably with a time frame of 2 to 3 months out. Support level wise, if we were to see further weakness returning back to the market again, support level here right now remains at 24,030 points. So if you were to pull back to those levels, I think we'll likely see further consolidation happening at those levels. That represents a downside risk of about 3.5% for the Hang Seng Index. But nonetheless, our base case scenario, we do expect a further breakout move to the upside, playing out following this recent breakout move that we are seeing. Just to cover the downside in the worst case scenario, if this support level at 24,030 points fails to hold, the next stronger support that will likely see further consolidation or further buying would actually be somewhere near 23,125 points, which is the low set back in September of last year. So that will likely be the worst case scenario if we were to break down further below the near-term support that we just mentioned. Yeah, so that's pretty much all I have for the Hang Seng Index. Kind of looking at some bottoming price action showing up right now, which we think will transpire out nicely over the next 1 to 3 months out. So yeah, that's all we have for today, and we'll see you guys in the next one.